Hello traders, how are you? Happy Sunday and happy trading week ahead. Vladimir Ribakov here from Traders Academy Club, and this is the Forex Weekly Market Review for the week starting on 29th of July toward the 3rd of August. Who would believe August is already here? First of all, thank you very much for watching this video. I hope my ideas help you to find your trading opportunities. If you like the video, the ideas, please show your support back. Hit the like button, leave your feedback on the comment section below. It would be very appreciated. If there is any instrument you would like to get a view, let me know. Generally, what I am trying to do in this video is to prepare the start of the week with the best instruments as I see them to be traded and focused for this specific week. So if any instruments are not here, that's because there is no clear picture from my point of view, of course, based on my trading plans. So I'm trying to choose the best ones. If there is anything specific sorry, that you would like still to have, and ask on the comment section below. On Monday I will publish the weekly review, the PDF version. So follow my newsletter emails or just come back to the video, and below on the comments and the description I will add the link to download the PDF for your convenience. So your support back would be very much appreciated. Let's begin the week and the trading plan. So the summertime is here. It's here big time, and we can see, I would say, the majority of pairs, of course not everyone, but a majority of pairs and the instruments in completely low volumes, not moving up, not moving down in significant moves. It's classical summertime, plus the fact that everyone is expecting September and October or the European decisions regarding the quantitative easings. Everyone is expecting to see what will really be the impact of the trade war, and the money, the big money, is at the end of at the bottom line. The big money is still lying down, waiting for the best opportunities and the summer to pass. So as always, on summer the moves can be random, fast, sometimes not technical. So it's very important to keep the risk low on such periods. You know, my personal view is always we better find the ways where the big money is and try to join it, rather than trying to fight and try to be a hero, make some calls like, oh, I was right. Trading is not about being right. Trading is about making money, right? That's the bottom line. That's why we are here. Trading is to make money, make the profits, and that's all. So before the technical part, let's quickly take a look at what we have fundamentally this week. This is non-farm payrolls week. It starts, however, with Monday and business confidence in New Zealand. Then we have the outlook report and policy rate and the policy statement, monetary policy statement in Japan. I would pay attention to that. That could be interesting. GDP in Canada, consumer confidence in the US, unemployment change and unemployment rate, employment change and unemployment rate in New Zealand. That's on Tuesday. Wednesday we are more warming up, mainly with the ADP report and the manufacturing PMI in Britain, ISM manufacturing PMI in the US, and boom, the FOMC statement and the Federal Reserve, the rate decision. Now, as for now, the Fed is not expected to do any changes, as you can see on the forecast line right here, but surprises happened in the past. They will happen in the future. The rumors are saying that the expectation, not rumors, are showing that the Fed is expected to increase a few more times on the next several decisions. Who knows if that won't start now. Trump from his side is putting some kind of pressure, saying it's kind of ridiculous to go so many times up while no one else do so. We will see how it goes. Thursday, we have the cash rate in Britain, who are expected to go for a hike. We are expected to see the official bank votes and the inflation report, and Friday non-farm payrolls week. So let's start with the euro dollar, which is the first pair we have on the watch list. Now, on the last couple of weeks, maybe even 3 weeks, our idea was the same: look to buy the bottoms of this range. Why? Because we had a previous cycle, which was a special cycle, which after that we expected a correction to happen. Correction could happen only in 2 ways in order to be official, right? That's 2 waves up, or A, B, C, D, or 1, 2, 3, 4, or alpha, beta, gamma, delta, whatever you want to name it. So that's the first option. And the second option is ranging pattern. Ranging pattern could be horizontal, triangle, whatever it is, but the idea is same zone of collaboration here. So what you can see here is the pair moving sideways inside the range, having hard time to go and create the highs. That, from my point of view, means that now, as the range is developing and we have several legs inside it, we should start to switch, not to look to buy the bottoms, but to sell the rallies. That's the way I see that. So if the euro dollar will manage to make here some kind of another rally, I think it would be the end of it, and we should be looking to sell around these areas, right? So if we manage to rally towards these areas, we now should be looking for sell signs. Can we still trade these little rallies? Of course, but now it becomes riskier, right? Why? Because inside this range that I'm just talking about, whoopsie, here and here, now we have several legs inside, right? It's more like a triangle here, and each of the legs is a cycle by itself, okay, as you can see. So that is normally a sign that it's coming to the end. It might not happen even this week, but it's building up, and on the short term we can still see that happening, definitely. But now concentrating on sell rallies with bearish signs like false breaks, bearish divergences, and trendline breakouts after the rally lower lows to start to happen on a lower time frame from the one you work with. That's signs of the possible bearish continuation. And of course we have this triangle or range. If we start to go below that, sell the rallies could be a great plan, and there is a good chance the euro dollar will try to take it towards 114, 113, maybe even slightly lower, who knows, right? So basically I would not be surprised if we go for second leg here to create some kind of divergence. So for me it's sell the rallies. It doesn't mean that on the short term we can't see the pushes, we can, but if I wanted to see these drops and buy them on the previous few weeks, right? The idea was drop and buy, drop and buy. Now, since it's developing to the sideways, it's sell the rallies. They could be to the top of the range. They could be with a new fake high. Whatever the market will provide us, we have the options to go for sales. Next one is the pound dollar. They have the cash rate decision this week that might have the, well, that will have the impact if they go for a high, but not only. Also, what will they say? How many voted to increase? How many voted to, that stupid decision we can do? So basically, let's talk facts. The fact is that based on this cycle, 61.8 is slightly lower, around the area of 127, 128. This is still bearish trend line. The pair had few false break, but never managed to make higher highs. On the previous week, our goal was look for the buys. We got this engulfing, and the plan was look to buy the dips. And actually this is exactly what happened, because after the engulfing we got a pullback and boom, we got a rally, providing us here a beautiful opportunity. Such patterns many times, of course it's not a rule of thumb, but many times start to turn to be kind of a double-double, and then we see further continuation. But here is the thing, maybe the most critical event for the pound dollar this week is the cashier decision. So the fact is, the pound dollar does not have anything bullish yet confirmed on a daily for a reversal. What it did have on the previous week was a false break, engulfing with almost equal tails and divergence. That's classical for a short term. For a long term, we still require, after the false break, by ideal higher highs, which we don't have, or at least trendline breakout, which we don't have. So the rallies might be over at this stage, or it might try to make the second leg, but many things will depend on the words that will come out from the central bank in UK this Thursday, and non-farm payrolls following. I would not be surprised if the pair does not break the trend line and does not create higher highs. That might be a beginning of a journey to the 128, 127, where from I expect it to be the end and bigger rally to take place. That's the idea. But if we do break the trend line, if we start to create the higher highs, then start looking for your buy setups. So for the pound dollar, if it fails to break the trend line and make the higher highs, sell rallies could be still the right decision for a longer run, because previous week we were short-term bullish, and we gotta move. It's now time to be careful. If it does break the trend line and higher highs created, it's supposedly a good sign. So that's for the pound dollar, which I would definitely pay attention to. Looks simply wonderful. Dollar yen, a pair that we wanted to go for sale, and we have the sale. I think we have more to go. This is what currently the pair has for us. I would not be surprised to have further continuation towards these areas. So sell rallies is still the plan. Very important to remember here is an invalidation area, which is the last stop, right? Invalidation, if it breaks above, game over for the bearish view. Meanwhile, sell rallies is from my point of view, is a good plan, and we have the area here. We have the area, well, critical area here, right, around this resistance. So we can go there and continue further down. That's for the dollar yen from my point of view, as long as the invalidation holds. Next one is the euro versus the Canadian. Some crosses. By the way, there are majority of majors are still in completely not clear picture. New Zealandian dollar, dollar CAD, dollar franc, etc., etc. So I will go with the ones that have clearer view from my point of view at this stage. EURCAD is bearish according to the long term. This was the first cycle. This is the second cycle. So bearish run from my point of view is expected here. So what happened was on the daily chart, we got a movement here. Trip, special or double, the top holds. So as long as the structure continues with the lower highs and the lower lows, from my point of view, it's sell the rallies. So here, cube, and continuation. This is the current structure building up. So from my point of view, sell the rallies is the right thing to go with. I would pay attention to the expansion, cycle expansion, for possible targets. You see where the 61.8 lies in, right? And the 160, ouch, what's that? And the 161.8 of this cycle would fit in right here. This is the area where I believe the pair is going to, and this is the invalidation. Okay, so we are bearish as long as sell the rallies is the plan here. New Zealandian Canadian is another pair that I am bearish, as you know. I've been covering that for several weeks. We gotta move. I think it has the room to continue. 61.8 of this cycle is lower. 61.8 of this cycle is also lower. So from my point of view, this is where we are heading first of all, and then very likely towards the next zones. So that's my view. Yes, there is kind of divergence developing here, but it's just the beginning. It's not over. It's not formed. No turnaround. No higher highs. No trendline breakout to the upside. So the plan is bearish yet. And that's basically the best Forex opportunities as they appear. As for now, of course, things might go and change during the week. So we will see. We will see how that develops. Of course, I'll keep updating on the daily basis in the live trading room, and that happens in the Traders Academy Club. So for all those of you who are members, just follow the live rooms. For those who are not, you are more than welcome to join us and enjoy the daily trading report, updates, setups coming with the live trading room. The next one is the gold. Gold is beautifully situation here, holding the lows of the 21st zone right here, right? It was ranging meanwhile. Also the beginning of the new months. First, third are critical bullish days. So gold could hold here or try to make another spike for a false break for some buys. So from my point of view, the correct thing to do with the gold is to look for buy setups, even if that means get one more low. I would be focusing on these days I mentioned before, and that to happen this week. So drops, from my point of view, is the right thing to look for the buys. Right after that, we can see the levels we have here, right? The action zones for us, 1 and 2, critical areas where we could expect the gold to bounce from and start the bullish run. Natural gas, something I normally don't talk about, but it looks very interesting from my point of view. So what we had here on the pair was a pretty serious drop to the downside, false breaks, horizontal and trend line, divergence in play. Now the pair finally has the structure of the higher highs. There is kind of divergence here, so it's good to look for double confirmation in that case, and that means two waves retrace and breakout, or a bullish hidden for continuation. So if we get this happening, right, between these two lows, we would be looking to buy a bullish hidden divergence. So one more low on the histogram, would create the reversal sign for the continuation sign for the bullish hidden divergence, where from we can look for the buys to continue, and everything is relevant as long as the invalidation area holds. Because if we cross one straight move to the downside, that's a big X on the bullish scenario. Okay, so we have to be very specific here. Divergence is signs against us. We want to turn it again to be bullish, to follow with the bullish divergence. That's the goal here. Indices. We have our German DAX plan. Now, previous week invalidated the high, the breakout. Now this is for the short term, becomes basically on most likely as a neutral. The whole idea here is still bearish due to the weekly head and shoulders, right? So sell the rallies would be still the plan. However, the best thing to go with would be if we manage to turn around, make trendline breakout, lower lows, and then sell the rallies. Meanwhile, it's neutral, it's tricky. The agreement, I would say, between Trump and the Eurozone about the trade war, still don't know if it's about to happen or not. Of course, it comes with a fear, as always. But I would play conservative here. Trendline breakout, lower lows to be created is a good sign. Without it, I wouldn't even bother to trade. And I would pay attention to NASDAQ. Look what happens. The index reached the psychological zone, 7,500. Amazing area. In some places, unbelievable, right? Has a beautiful inverted hammer for us right here. What happens is also a divergence on the weekly, a false break on the weekly. We also have, take a look here, I'm trying to draw it accurate, right? A third spot on the top trend line, horizontal false break as showed before. Daily chart is a divergence by itself on the moving average. And look what happens on the 4-hour chart, also divergence, and now a principle of the lower lows, and from here we even have the convergence idea. So from my point of view, aggressively, because it's still short term, as long as this invalidation holds, I would be looking for sell setups on the NASDAQ. It looks like something might go and happen here. And the 4-hour chart target is the first one. I would be basically the first zones I would be looking to cash out here and here whenever we get the opposite signs against us. And for the longer run, we still have the triple rally here. So for the longer run, we can go and head towards here. Okay, so aggressively, as long as the top holds, I'll be looking for sell setups, and aggressively because it's still the short term. Weekly does not have lower lows, trendline breakouts, or anything like that. So only on the short term. And for cryptos, we have the Ethereum big range and small range. So breakouts to be followed. It could be to the upside, or if the sentiment not getting correct, we get it here, or one more for the lows. And same with NEO, which has this one, right? The NEO which has this range, break above that and making higher highs should provide buy opportunity, but it could easily make one more low, duplicate these two legs, duplicate these two legs, take us towards this area before the buys take place. So pay attention to the triangle. We also have inner patterns here. The breakout has to happen, and it might happen very soon. So attention. That's the best two things as to find them. There are some more building up for further, like the Ethereum versus Bitcoin right here. But I really would like to see that slowly building it up like this, creating some kind of divergence, and from there looking for master buys. So meanwhile, Ethereum versus the Bitcoin remains bearish, like complete majority of the cryptocurrencies. The volumes are back to this market, so I think the cryptos are back to good period to be traded. That's all for now, friend. Thank you very much for watching this video. I hope you enjoyed that. Not too many instruments from the Forex side yet. It's weekend after all. It might all change the beginning of the week, right, with the fundamental event. But as for now, I chose this to be the most technically well structured to be followed. That's all for now. We have enough other instruments on the list to trade. So for a trader, it doesn't matter what's the name of the instrument, as long as there is good technical opportunity or fundamental opportunity, it should be traded. That's the bottom line. The name of the instrument is only secondary. I'm Vladimir Ribakov, Traders Academy Club. Thank you very much for your time watching this video. I hope you have a wonderful trading week. I'll see you soon. Bye for now.